Me, Kevin, just released a video on the Coinbase IPO, and I thought, hey, you know what? I need to make a video about this too, because there's some important considerations that I think he left out that you should know about if you want to buy in the Coinbase IPO on April 14th. It's coming soon. They just had massive results from their last quarter. We're going to talk about that, and we're going to talk about the biggest risks that the company faces. So Coinbase is the biggest exchange in the USA for crypto, and that's in terms of volume. And just to give you kind of an idea of the potential, this right here is my Charles Schwab account. And in my other videos, I talk about the breakdown of this $3.4 million portfolio. Make sure to subscribe if you want to see that. But Charles Schwab is a company that is valued at $126 billion. So I just want you to kind of keep that in mind. This is a top platform for trading stocks. Coinbase, top platform for trading crypto. Can Schwab start getting into crypto? That's an interesting idea as well. So let's talk about this. Now, there's been a massive tailwind, meaning this company, Coinbase, has been exploding, and it is perfectly primed for April 14th for a public offering. Now, this is actually a direct public offering. So this is from the direct company to new shareholders, and they're selling shares, people that currently own because of Coinbase. Shares from working at the company can actually sell, and this is different than having a broker, which are most of the actual IPOs. So they have been dominated. They actually just released Q1, and they have earned more in 2021 Q1 than all of 2020. They have been pretty much a 6x compared to the other quarter in 2020, and they're going live with an IPO soon. So it's kind of an amazing timing for them. So Meet Kevin talks about the S1 doc, which is a document that Coinbase released. It's basically a document that private companies release ahead of their IPOs to give more information on what's happening with the company, how they make money, and allow you to kind of determine and get a little bit more knowledge on the company before it opens up to new buyers. So how does Coinbase make money? If you're thinking about buying, you better know how Coinbase makes money. So Coinbase is making a ton of money and is an amazing company because their model is just so clean. Software is eating the world. If you've heard of this quote, it's by this guy, Marc Andreessen. So Marc Andreessen, this article, by the way, is from 2011. So he said this in 2011, an absolutely genius investor and someone that really understands the market. And this is true with any industry. So if you kind of think about the industries revolutionizing, let's say transport, guess what? It's going to be the software companies like Tesla. If you think about the revolution of purchasing products like retail, guess what? It's Amazon. Software is absolutely eating the world, and Coinbase has been dominating because of just their business model. So Coinbase's business model is based on fees. Now, Coinbase has a few different ways it makes money, but here's some ideas, and this information is kind of hard to find, but there are fees when you deposit money, when you use the wallet, when you want to fund with a credit card, when you want to wire, when you want to convert your crypto. So there are a bunch of these different fees, and there are also fees based on if you have a Coinbase Pro account, that the fees get better for you. And there's also a spread. So when you buy Bitcoin, they're going to mark it up a little bit, and they make some of that spread. So what this means is it doesn't matter if Bitcoin goes up or down, because guess what? They're making money on the actual fees and for each transaction. This is really user-friendly. It's a great way to go. The platform is super easy to use. I actually started using Coinbase as the first platform for crypto. And the success of the company, though, is based on users. So even though the business model is super clean and they have huge margins, 25 to 40+% margins, which is absolutely incredible. The biggest thing you got to be thinking about is the users, right? So what happens if Coinbase goes out of style, for example, or if there's a scare with company security, or there's like massive liabilities? And actually they did just settle a lawsuit of $6.5 million. They didn't say, hey, I'm guilty, but they did settle with regulators of the CFTC, and basically for According to the CFTC, Coinbase recklessly delivered false, misleading, inaccurate reports concerning transactions in digital assets, mostly about volume, things like wash trades, and just maybe misleading traders about trading volume. Okay, who knows? But really, who cares? They have actually been growing in the most important base. Okay, this is something that Kevin did not mention. It's the most important base of the success of this company. To me, it's institutional investors, right? It's big old companies buying crypto, selling, trading, holding crypto as a allocation for their treasuries, right? So just like Tesla purchased 1.5 billion in crypto, which is now worth maybe around 3 billion in crypto, that is the institution. And Coinbase has some amazing solutions for institutions. Look at that portfolio. Man, that would be nice to just log in that. Everything's relative. The amount of money you got is relative. But they have Coinbase Prime, and so this is institutional investors, and they have all these tools. So institutions have actually been outpacing retail, and institutions are the ones that I really care about because guess what? They can do way more research than I can. So they know, and they've done a lot of research on, hey, is this trustworthy? Is this safe? It's said that 5 Fortune 500 companies or more are clients of Coinbase. So this is private, these are rumors, but 5 Fortune 500 companies are said to be clients. And the bulk of volume has basically shifted from retail investors, that's like just you and me going on the app, putting in some trades, to institutional customers, right? So this is really important because it's mirroring this overall shift by big old investors to dip their nose into crypto. So this is really important. And when I look at a company, I can't do all the vetting myself. But what I can do is I can go, okay, so who is someone that I believe will do a good job in vetting if this is a good platform? And that is something that gives me a lot of confidence. So Tesla actually worked with Coinbase in this Bitcoin buy of theirs, which is pretty cool. If you heard from Elon about why he made the jump in buying Bitcoin, he'll actually say that he felt a lot better after Washington Mutual bought Bitcoin, which is a really conservative company, and they decided to hold a very small allocation, but still a ton of money towards Bitcoin. So Elon's kind of using the same idea of, hey, all right, let's see who we really trust to vet, and where of course Tesla vetted the heck out of this and made this move. So the business of Coinbase is solid. They have a solid margin. It's incredible. It's clean. It's profitable. And if they wanted to go into growth mode, by the way, they could. So what I mean by growth mode is they're already growing incredibly quick, 40 million active users, but they can grow even faster. And they can dip into their profitability to fund that growth. So how can they do that? Well, they could say something like this, like Webull, right? Hey, get 2 free stocks. What's Webull doing, right? They're buying those stocks. They're giving it to you. They're basically paying to get more users. How about BlockFi? BlockFi gives away $250 of crypto if you join. And I don't have a link for you. Go to Meet Kevin's link. metkevin.com/BF if you want to join. All right, Meet Kevin, I got your back. So they could do this, right? And the goal is to take market share, to basically say, hey, I'm going to pay to get people on the platform to take market share. This is actually how PayPal first got started with Elon Musk and Peter Thiel and the PayPal mafia. Guess what they did? They started basically bribing people to get onto PayPal. So I wouldn't mind if they did this. I wouldn't mind if they purposefully lowered profits to get market share. So I would be totally cool with this. I was looking at their S1 document, and it's kind of motivational here. Coinbase powers the crypto economy. Our mission is to create an open financial system for the world. Today, the way we invest and save is cumbersome and accessible, yada yada. We want to free the power of the not dollar, but of the coin. So this is pretty cool. Really looking at the overall bigger vision. And I think that this kind of segues into this idea that I think a lot of people who maybe aren't wanting to buy and hold crypto and deal with all of the ramifications of that, but who still want to benefit from the rise of the crypto economy, they might actually buy Coinbase as a kind of correlated asset. And Coinbase, which I think is genius, guess what their stock ticker is? It's COIN, COIN. And why is that genius? Well, to buy Coinbase, you buy coin. And I think that that correlation of people kind of thinking, okay, if Bitcoin's going up, Coinbase is going up. If crypto is the future, it doesn't even matter if it's Bitcoin, right? It could be Dogecoin, who knows? And maybe Dogecoin will help get on to, first they got to get on to Coinbase, and then with Elon's help. But if any crypto wins, Coinbase can win as long as they have that crypto, which they most likely will, right? So a lot of people might be buying Coinbase kind of as that proxy stock. So what the heck is going to happen on April 14th when this thing IPOs? So IPOs are crazy times. DoorDash and Airbnb, on their IPO day, they jumped 85% for DoorDash and 112% respectively out of the gate. This stuff is so freaking fast that as a retail investor, you might not even catch it in time. I know someone trying to buy Twitter stock on the IPO day. They couldn't even fulfill the order. So it's absolutely insane what can happen on an IPO day, but it doesn't mean just because you're a hot new technology like DoorDash and Airbnb that things are going to go good for you. Here's Uber. Uber stock sinks more than 7% on the first day of public trading. What determines if something's going to blow up or blow down? And what could that be? Well, it's really hard to understand valuation. And valuation is the only thing that matters, right? If the stock is at $10 and all of a sudden, it should be valued at $12 because really the value of the company is 20% higher than the market cap at that $10 rate, then it goes up to 12. But the thing is on IPOs, it's so freaking tricky because you don't know how to value a company, especially when it's new like Coinbase, right? So Virgin Galactic is the first ever space type industry that's public. I'm trying to buy SpaceX, by the way, right now on the secondary market. You can buy from actual shareholders. That's a whole other video. Let me know if you want me to make a video like that. But here we go. So the IPO of Virgin, what the heck happened? So it was a SPAC, and it's hard to know, like, what should happen here. They don't know how to price it, right? It goes $10 to $7, so down 30%. Then from $7, then in February 21st to $33, up almost 5x. So it's very hard, and you can see all this crazy volatility, right? It's very hard to understand how the heck you should value a company that's completely brand new. Crypto has been absolutely on fire. Trying to IPO is something a lot of companies love doing because they can raise a ton of money. BlockFi is another company, kind of like Coinbase. They specialize in actually paying interest on your crypto, and they're trying to get as fast as possible to an IPO. There's a lot of documents and things you got to do. Crypto's on fire. I'm up 82% in just 2 months from some of my crypto trades. And this is sure to reach headlines. It's sexy. The market is about supply and demand. And right now there's a lot of demand, and there's kind of a lot of demand in general for just like the next hot thing, right? You've got NFTs. People are trading friggin' virtual basketball clips. It's absolutely insane what's going on in the market. And this is kind of priming the momentum for Coinbase to crush on opening day. But IPOs are incredibly tricky. They have had an amazing Q1 report that's going to build a ton of hype in how they've earned more in Q1 than all of 2020. That is insane. Should you buy? There's a lot of risks. IPOs are absolutely insane days to buy, probably one of the craziest. But you also want to be thinking about the company, right? I'm okay with buying right before earnings. I made a video buying right before earnings, like for Amazon, like 6 months ago. But the reason why I buy right before earnings, if I think earnings are going to beat the expectations, is also because I'm long-term in the company, right? So I would only recommend you, I can't recommend anything, not a financial advisor here, but I would say that you want to keep in mind that when you invest, typically you want to invest in the company long-term. And you want to be thinking about things like security, liability, the leadership of the company. What about the competition? Is there a moat? And there's some interesting things happening in the legal world where Mnuchin is wanted to pass something that is KYC, know your customer, know your client, And what this is it would kind of cause some real frustration for these platforms. And he wanted to pass something, it got frozen by Biden. And if this goes through, it would cause a lot of headaches. So what this regulation is, and Jack Dorsey from Twitter explained this, and he says, hey, this is crazy. Basically, what this would do is if Square's customer, Square the company, which famously bought a ton of Bitcoin, if Square's customer's mother gifts her daughter $4K in cash, and the daughter deposits it in a bank, the bank would have no obligation to get info on the customer's mother that gave her the money, right? The bank doesn't go, hey, who gave you that 4K that you're depositing, right? But under the same proposal, if that transaction occurred in crypto, though, the bank would have to go past its relationship with the daughter. So say it doesn't even have the mother as a client, it would still have to figure out how to get the mother's private info from the daughter to access her gift. So it's going to lead to a lot of really crazy things. Check out the Coinbase IPO. We'll see what the value is. Valuation 70 to 90 billion, something like that, of the company currently, based on private market stuff. It's pretty crazy, but there is a lot of upside, especially if this is the new crypto economy, as the CEO has said. So let me know what you think in the comments. I'd love your opinion. I actually got recommended to do this video by one of you in the comments. I read all your comments, all of your half dozen comments that you guys leave on my videos. I'm here to help. I would love to just answer some stuff and get some ideas for future videos. Thanks, guys, and I'll talk to you soon. See you later.